Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
My top pick this week is Cadence Design Systems, CDNS. This is a software company that specializes in serving the semiconductor industry, or sector, you could really call it. We bought Cadence on Friday under 124, was initial position, and I've just been excited about this company for a while and what they do. So I wrote this report for my people for Taser on the semi ecosystem and the lightning resurgence, just how these, the whole industry has roared back. When you think of Cadence, think of two acronyms, EDA, which is Electronic Design Automation, and SDE, System Design Enablement. Those are the two things that this software provider for semiconductors does. Now, so let's see where they fit in the broader ecosystem. And I found a great graphic from Counterpoint Research. They're a technology research firm out of Asia. And they wrote this article in January about something we've all been hearing a lot about, and that's the semiconductor component shortage in the auto industry. And so they had a cool graphic here, sort of laying out the ecosystem. So here's the automotive semiconductor supply chain. Obviously, you've got the vehicle OEMs all the way here at the end product. Who are the intermediaries? You've got companies like Bosch and Panasonic. And before them comes Toshiba. NXP is in there. They're making the components that go in a vehicle. NVIDIA's in there, Texas Instruments. And then before them comes the foundry, the fabs. Where are where's the hardware actually made? Samsung makes quite a bit of hardware, but so does the giant TSMC. That's Taiwan Semiconductor. The stock symbol is TSM. When a lot of chip designers and manufacturers went fabless, they rely on the foundry at TSM to make their stuff. What you don't see here is, we'd have to go back further in the chain to find some other important companies, like who makes the equipment that cuts silicon wafers. Well, that's Applied Materials, AMAT, and Lam Research. And then you have a company like ASML, which I don't think is on here either, that does the lithographic etching, the laser etching to make circuits. Okay, so back to my little thing on the ecosystem here. Let's look at, and we can also compare Cadence to Synopsys. I've been writing about both of them since last August, talking about CAD CAM goes exponential, and software are now the mechanical engineers creating the future as they help design these chips that are going in everything. Right? You have industrial. They talk about the industrial AI OT. So artificial intelligence, Internet of Things. As machines and software become more and more connected. So here's Synopsys. Very similar companies. When I first looked at them last August, both around 32 billion market caps with 3 to 4 billion in sales. Hey, they're not cheap. And right now, Cadence is probably going to do forward sales estimates are maybe 3.2 billion, and the stock is trading for 35 billion. So 11, 12 times. They're not cheap there. Now, what both I say Synopsys and Cadence have like this duopoly because they both provide key software systems, both EDA, Electronic Design Automation, and SDE, System Design Enablement, to Taiwan Semiconductor in what I call the nanometer wars. And if you want to learn more about the nanometer wars, just Google this article I wrote last fall, Release the Ryzen, AMD roars in the nanometer wars. So they're helping TSM get down to 7 nanometers, 5 nanometers, and even 3 nanometers, which is, where all devices are going as they get smaller. I'm sure Apple is trying to contract for the next you know, layer lower, so to speak. All right, so let's learn a little bit more about Cadence from the company themselves. So they talk about their intelligent system design strategy. I just want to show you a couple slides here. So this is, these are the major electronics industry trends that they want to be a part of. Data science and machine learning, hyperscale computing, think NVIDIA, 5G communications, we know what that is, industrial IoT, and autonomous vehicles. And let's see how their strategy for doing that. This is how Cadence sees themselves fitting into the ecosystem in providing these key software tools for designing and manufacturing chips. So this is sort of the circle of innovation that they want to be a part of. System design with algorithms, then the actual EDA software and manufacturing automation, and then they're getting into machine learning and AI. So this is the wheelhouse that they want to be involved in. Who do they serve? Let's talk about that. I was surprised because one of my favorite companies, as you may know, is NVIDIA, and I thought NVIDIA would do a lot of this in-house because they are also masters of software. But much to my delight, the Cadence, NVIDIA is a Cadence customer, and you can see that right here on their who they're helping out here. NVIDIA embraces the groundbreaking technology Dynamic Duo 2.0, which is an EDA or SDE from Cadence. And they also serve AMD. And so that's what you want to see, that they are becoming embedded in the semiconductor ecosystem. They're even helping out Fujitsu with giant supercomputers. So, and there's Ambarella. All right, so take a look at Cadence. And again, it's not cheap, but we're buying a pullback here. And I think this stock can make new highs above 150 even this year. All right, next up is Dan with his top pick.
Thanks, Cooker. So I am going to be pitching Target today. Target just had an absolutely blowout quarter in Q1, and they just released that last Wednesday. Each day, subsequently, they've hit a new all-time high. And this is just a retailer that was built for the largest consuming generation today, millennials, and it's unmatched on-the-channel solutions that has transitioned this brick-and-mortar company to a digital powerhouse for retail. Is really pushing this stock and its financials to the nth degree. And you saw it with the record EPS this last quarter. A lot of this enterprise is being driven by their leverage, like I said, with same-day digital services such as order pickup, drive up, and Shipped, which is a delivery business that they own. But just their same-day digital delivery services were up 90% in Q1 from last year. So let's take a look at the chart to see where it's trading. It's hitting, like I said, fresh all-time highs on a daily basis. Is it time to get in now, or should we wait for a pullback? So let's check out the charts and dive in here. So as you can see here, Target stayed relatively buoyant during the beginning of this pandemic sell-off, actually outperforming from this end of February capitulation start to our bottoms here. It stayed, much more buoyant than the broader market as the S&P 500 dipped over 35%. This dipped, probably closer to 25%. It looks like here, and came back swiftly. Like we were back to our pre-pandemic levels in early May, and just continued higher and higher. Its ability to adapt to this new culture and this new, I guess, way of life is just being shown throughout the company. And you can see it even before the pandemic, but the pandemic really kind of magnified the effect of this digitalization as it kind of forced people to utilize their digitalized, on-the-channel solution platforms. Like I said, Shipped, their order pickups and drive up options, and that's driving a lot of the growth for the company, and they're customers are going to continue to use those options as they as this economy reopens. And the CEO Brian Cornell came on CNBC last week and said we're seeing much more optimistic customers who are excited about getting back to life. And they haven't seen life in the last year, and it appears that Target is the place that is bringing people back to life. They're spending on apparel there, they're spending on everything, and Target is the place they're going because of, like I said, these omni-channel solutions, as well as the aesthetic of the place. Like if you walk into a Target, it's aesthetically pleasing, and that combined with the value that the company provides. Target always has super low prices on things. It's the perfect storm for this new cohort of consumers. So as a long-term hold, I think Target is really well positioned right now. We're looking at price targets around $300 a share after this blowout earnings, like we discussed earlier. But like I said, one thing to be apprehensive about is this overbought level we're seeing for the RSI. And typically when we see these kinds of crazy, 10% rallies in 4 days of trading, you could see a short-term pullback. But like I said, this is a long-term buy and hold stock. And if you're not worried about short-term volatility, then yeah, go ahead and jump in. If you do want to wait a little bit and see if there is a pullback, wait till these RSI levels drop a little bit, because you can see, every time it gets up to, it's been pretty overbought, but usually when it gets to these overbought levels, it does have temporary pullback. Not even that sizable, but it does pull back. So be wary of that as a short-term play. So just to reiterate our picks here, Target was my retail pick for this roaring 20s, and Cadence is the semiconductor company that Cooker pitched earlier that I think has a lot of potential as well. So don't forget to check out Zacks.com/promo, where you can get Kevin Matrix's #1 stock picks, our home study course. And again, check that out at Zacks.com/promo. Thanks, guys. See you next time.